man, Donald Leggett, and welcome to our latest London South East CEO interview. Our guest today is David Traynor, CEO at Byotrol, the AIM-listed healthcare company which specialises in surface and hand sanitisers. Byotrol has a market cap of around £31 million, and we're here to discuss the latest trading update from the company. Greetings, David. It really is very good to see you today.
Nice to see you, Donald. Morning.
Yep. How are things with you?
Good. Well, we've had an extraordinary year, we can talk about in a second, and we're tired but pleased with the performance so far and really excited about what's going to happen in the future for us.
Okay, let's quickly talk about those numbers then. We're discussing results for the year which ends March 31st, 2021. And the twin highlights for me would be turnover up to over £11 million and EBITDA up to £1.7 million. Are you pleased with that as a performance, David?
Well, it's been a very good year, hasn't it? So turnover's pretty much doubled in 12 months. EBITDA's up by 6.5 times. That's a pretty good performance by any measure. And we have no debt. So we paid off all the debt over the course of the year. And we are financially very, very strong and looking at further growth going forward. And I'm particularly pleased the team have done so well during very difficult circumstances, because obviously they've been dealing with the same sort of separation things that the rest of the world has been dealing with, while being extraordinarily busy work-wise and not actually being able to sit down with each other. But the other thing I like is our technology performance has really improved as well. So over the course of the year, we've opened up a new virology lab with a couple of expert virologists in there, and that's quite a rare thing for a company of our sort to have. And we're coming out with some new test protocols and new performance characteristics in our products that will carry on sort of giving us leading edge products, but also really, really good technology to license out third parties. So yeah, it's been a really good year.
So you seem to be building the company for growth. Looking ahead, is demand sufficiently strong to be able to deliver that level of growth all over again? Or am I being too optimistic here?
Well, we just put out analyst guidance by FinCat that we should beat this year's numbers in the year to 31st March 2021. Not a massive beat, but a bit on the bottom line to deliver about 2 million EBITDA. And I would hope that we would actually beat that as well when we get to the end of the year. We have some consolidation to do, because we've effectively been through 3 or 4 years worth of growth in 12 to 18 months. I still haven't got to the bottom of the integration process with Medimark that we only bought formally in February, but obviously can't sit down with them. So it's very difficult to do lots of the basic things you want to do. But we are in a different place market-wise right now. So demand has obviously gone through the roof, and it's much more nuanced and thoughtful demand than it used to be, because people understand the risk rewards of dealing with products that can eliminate viruses. And we are a very different company, and we're twice the size in terms of people due to the acquisition, new technologies, new financial position. So we're really well placed to do really well in this new world. And so, yes, I would hope that we will grow quite a lot more from here.
Does that nuanced demand that you referenced there, does that actually benefit you, given that you've got a scientific approach?
Yes, the science is the core of the company. We're 1/3 scientists in the business right now. And I think of that, 10, 11 people are lab-based scientists, which we have more scientists than salespeople in the organization right now. And our positioning is that in this new world, you need to have really good scientific rigor to everything that you do. And you need to validate everything to a level that means the customers you're dealing with really believe in what they're selling on your behalf. And the way to build long-term trust is by carrying on delivering to that scientific and highly ethical level that we have been doing so far. So that was the strategy before COVID happened. It was the strategy during COVID, and it still is the strategy. So I'm really happy with the way that we have structured it, and I think that it's going to lead to a lot more opportunity as the post-COVID world develops.
Okay. Could you give us a sense of current trading as Britain comes out of the 3rd lockdown? What are you seeing on the ground there, David?
First half of the year just gone was very, very good. 3rd quarter was good. 4th quarter tailed off in terms of product sale because 3/4 of our business is to business environments, so professional products for use in professional environments. That's the consumables business, and obviously when the professional environments are being closed down, you're not selling a lot of consumables. So the 4th quarter was also good, but that's now opening up again. What I am seeing is that our biggest customers, the biggest distributors, now have a lot more knowledge of the space in which we operate. So you can't just get away with a cleaning product now. It has to be a cleaning product that actually is antiviral against certain viruses and has to have some degree of differentiation to it as well. So I'm seeing bigger orders from bigger customers with more demanding characteristics for the way they perform, but also sustainable and good for the environment, and we get the risk reward rights and all that sort of stuff as well. And I like that because that puts more pressure on us as a business and our scientists to come up with something that fits. And so better demand, more nuanced demand, more characteristics that we need to hit for them to buy is good for us.
And you see that feeding through to the bottom line, David?
Yeah, absolutely. Yeah, I mean, we're quite high operationally geared, so we don't manufacture anything ourselves, and the sales, when they get above a certain level for a relatively low cost base, go straight to the bottom line. So one of the reasons that turnover is, as I said, almost doubled, but EBITDA up by 6.5 times, is because of that operational gearing. Yeah, so every time we win a transaction, be it a license, an alliance, or an extra sales order, it can make a big difference to the bottom line.
Okay, acquisitions. We've touched on this once before. Would they be a good way to complement organic growth, of which there's plenty that we're seeing? And do you have a particular target in mind?
Well, we think we can grow very nicely organically as it is. I mean, there's so much opportunity. In fact, there's too much opportunity for us right now, and the key thing there is focus. We have a board that is set up to be really good with acquisitions. We've done 2 so far since I've been doing the job, but my chairman, John Langlands, did 50-something in his previous life. My CFO, Nick Hellier, was my takeover panel for 2 years. So we really get it, and we know what a good opportunity looks like, and we get the value that it can bring. On the other side, we also get how difficult it can be and how you can lose focus and how things can go wrong. So what I'd say is that we are eyes wide open to the potential, be it new technologies or new sales or competitors that are struggling and all that standard stuff. But we'll do it in a very cautious way because I think the organic build is also very attractive for us at the moment.
Okay. Licensing agreements. Once again, you've come up with some interesting things for us to discuss. Turtle Wax Europe, BioWorks in South Africa, Soltec in Qatar. Talk us through those licensing agreements and what they mean for the business.
Well, as you know, I like licensing. I like the financial characteristics of it because it's reliable cash that goes straight to the bottom line. We get to leverage off the credibility of the licensees and also use their distribution. But most importantly, it gets us into markets that we couldn't get into on our own. So, for instance, we have a license with Tristal in the NHS because we can't service the dispensers and all those various things that and the training that the hospitals need to the level that they could, and they have much more distribution than us. So I really like it, and I've always said that we should be aiming for around about 10% of revenue on licensing. 3 deals that we've done in the second half of the year that we hadn't announced previously. So Turtle Wax is the European version of a license that our US partner, Integrated Resources, did in the States for Turtle Wax. So you can find Turtle Wax long-lasting sanitizer on the shelves of US supermarkets right now, and that's a sub-licensee of our licensee. And so it's a natural extension to talk to Turtle Wax in Europe about taking the same product into European markets and maybe further afield as well at some stage. So that deal has now been done. They're a brilliant company. And again, we could probably not get into that market the level that they could, just don't have the expertise to have such a high quality partner getting products onto shelf to consumers as well, individual consumers, was really fantastic for us. So I'm really excited about that. BioWorks, slightly different one. That's a market that we couldn't really service from the UK. So South Africa and Sub-Saharan Africa in general. BioWorks, a company we've talked to for a long time, but it was a fairly small operation, and they've taken some investment and some new management. That's what we've done, is consolidate all our Sub-Saharan activities through BioWorks right now. And they're young, hungry, entrepreneurial, and good expertise.
So they've upgraded themselves and become a better quality partner, basically. Yeah.
I mean, they were always fine before. The relationship was strong, but it was fairly low interest for us because they were doing fairly small volumes, and they were making profit for themselves. But actually, the new team that's come on board think much bigger, talk much bigger, and I think are going to be really good for us in that part of the world. And frankly, I would never go out there on myself. We didn't have them, so I need an agent out there who I can trust. And then Soltec. Soltec is a Middle Eastern company. It's a subsidiary of Qatar Lubricants called Qualco. Massive company. Obviously, if you're selling alcohol-free hand sanitizers in current times, the Middle East has to be a really good target. And again, not a sort of market that we can service directly with 30 people based in Chester and Sevenoaks. So to work with Soltec, who are a technology-oriented company that has really good distribution, is really, really good for us. We're having some excellent discussions with them so far. So those three. And then there are all sorts of other things happening as well with similar lines. Markets that we can't get into ourselves quickly and efficiently enough.
Okay. Revenues are over 11 million. Contribution from guaranteed sales minimums and royalties is about 0.9. So it's a little bit less than the 10% that you just targeted. Is that the right target though? Could you make that a bigger slice of the revenues in future, given that you like that as a model so much and it goes straight to the bottom line?
The thing about licensing is it's good quality income and it's really good quality relationships with your licensees. So everything is good for the business in general. It's quite hard to bill large amounts, pounds of revenue from licensing alone, because what you're taking is taking a small percent of whatever your counterparty sells. So if we could do licenses that were generating millions of quid each year, I would do those all day because it's such a nicely sort of operationally geared way of doing business. But we can't. And I also figure that unless we have product on shelf, either business shelves or supermarket shelves or whatever, people don't really know you exist. So the combination of the two is good. And I always talk about 10% as being the target because I want to give some people something to hang their numbers on. But again, if I could do much, much bigger deals and more of them, yes, I would certainly do them. It's a very efficient way of doing business. There are also some very interesting financial dynamics around the way guaranteed minimums work versus and the impact that has on your cash flow. So for a normal license, you'll discount all the future minimum guarantees to current day. That's what appears in your P&L on day one. So in year one, you are P&L positive, cash less so. Then in following years, once the minimum guarantees have been discounted, you then become P&L lighter, but cash flow positive. So we're building up on our balance sheet receivables we call contract assets. It's north of £1 million right now. There's cash that's going to come in from licensees. You'll never see go through the P&L anymore. So little bits of value there that people understand the way these things work can see that actually it's very additive to the company in the long term as well as the short term.
So you've already got some good news built in.
Yeah. So basically, if you've got 10 years of £10 license minimum guarantee, you'll put about £90 through your P&L discounted back in year one, but they'd actually get the cash, the tens, in the following years, without the P&L. So what I like to do is add licenses to boost the P&L on day, each year, but I also know there's a lot of cash coming in, in the following years. And then over time, the royalties they're generating should exceed those minimums and add even more P&L, even more cash to the business. So yeah, I really like it.
Very good. Okay, excellent answer. Is the supply chain reliable again? And if it is why do you still think it's a good idea to stockpile ingredients?
We haven't got a huge amount of stockpile. I mean, during the peak of the crisis, national borders were closing down. And I think I said to you, there's one situation where we had 3 suppliers of a particular chemical. I was feeling comfortable, and I found out they were all based in the same place in India. And when India closed down its borders, So that was a lesson for us. So what we're doing is we're buying forward some raw materials, also to protect ourselves against rising input prices, give ourselves security should there be another crisis. Not huge amounts of money, probably a couple hundred grand in stock. But also it means that we can more quickly manufacture things for bigger customers. It says in your press release
around 1.1 million?
That's the total stock, yeah. Okay. Yeah, it's a total. That includes finished products. And it helps us to have more product ready to distribute quickly as well. So we're just trying to take a good risk-reward approach to it.
No, I mention it, but I think it's a very sensible approach you're taking.
Good, thank you.
We're discussing seaweed. We were discussing seaweed as a possible antibacterial source previously. So is that working out as a potential new product area? Is that the big new thing for you?
Well, I mean, the thing about seaweed is that whenever someone mentions it in these sort of situations, I find my legs start twitching a bit because it's really, really exciting. It's right on trend, so it's sustainable, it's natural, and the testing that we've done is showing some absolutely extraordinary results, not against bacteria, but against viruses. So you put those things together and you have something that, if we get it right, it is really, really, really valuable and good for society also. We have learned that it's very difficult to commercialize and monetize new technologies unless you really understand the mode of action. So the scientists at the moment are working with academics to truly understand what's happening at micro level and where the mode of action is coming in and what it's based upon. We're making a lot of progress on that, and it's still exciting. But only when I've done that will I then start talking. When we've done that, will we start talking to third parties about the way we can commercialize it. But at the moment, the prognosis, the noises coming out of the effort are very, very good. And I particularly like the antiviral nature of it, because the world has changed now. People understand viruses. I think I said to you last time that kids can now draw viruses, but they can't draw bacteria. And so something that's sustainable, natural, antiviral, high performance, it's got a lot of really good things for it, both in the business environment, that's going more sustainable products, but also the consumer environment where we can make natural claims, which consumers like.
And could you give us a sense of how long it'll take to commercialize? Is that a year, 2 years?
We won a government. We won an Innovate UK grant to investigate this, 350 grand over the course of 18 months. So I think certainly early next year, I should have a sort of pretty clear picture of what we got. And of course, before we start talking about it publicly, I will know internally what we have, and we'll be talking to potential partners then as well. Quite when that results in cash, I don't know. But I also know that it increases the asset value of the company overall, because it's another addition to our intellectual property portfolio.
Another good answer. Okay, and finally, news flow. What can we expect in the coming months from you, David?
Well, I mean, more of the same, really. I mean, the strategy doesn't change compared to what we were doing before COVID and during it. And so I would expect to put out more information on product launches across B2B and B2C. I would expect to be announcing more licenses and alliances, exactly the way as we have done before. But I think we'll be talking in more granular detail about where the company is focusing now, and that's the three areas. One is new products, finished products and ingredients for the professional market to give our customers claims that they can't get on their own, or to fill a gap in their portfolio, sometimes which we'll create for them, because we'll identify it as something they should be selling. Two would be more direct-to-consumer work. So we did about 20% of our business this year was consumer work via retailers. I think we can do better than that, but I need more resource. And I don't have a lot of resource right now, but I'm selling in boots. I've got all sorts of pet care products going out. I'm getting all sorts of incoming inquiry about surface sanitizers. So I feel we can do more there, both direct and also through retailers and partners. And the third area is licenses and alliance across those two areas. And I think I'll probably be looking to maybe add a couple of other technologies into the business as well at some stage, because they're not just a biocide business, there's all sorts of ways of killing viruses and bacteria.
Okay. Many thanks to David Traynor, CEO at Byotrol. Thank you very much indeed for joining us. We learned quite a bit about the business again there.
Good. Thanks very much, Donald. Enjoyed it.
To see more interviews like this one, please subscribe to the London South East YouTube channel. You can follow London South East on Twitter. That's at London South East. And as ever, thanks for watching. And please do keep using that Byotrol hand sanitizer to keep safe. Thanks, everyone.